Hey everybody, welcome back to Two Guys Talkin Houses. Today we're talking the 2026 market and what it's shaping up to be because Mark, let's not bury the lead here. Let's tell the good news right out of the gate, right? Things are heating up a little bit this year.
It's like somebody flipped on a switch.
Yeah.
Or turned on a faucet. You normally have, 5 applications a week or whatever, that all of a sudden became 17.
No kidding.
It's really, a lot of people are coming back who were considering and they were normally when somebody tells you, hey, I'm going to wait 6 months or 3 months or whatever, what do you do with that?
Usually I cut the timeline in half. And the agents that I train, I tell them, if somebody tells you I'm a year out, they're probably 6 months out and start following up with them in 2 to 3 months. And, that cadence seems to work. So
Right.
Is it the same thing in lending?
Well, sure, except a high percentage of them don't ever buy a house.
Right.
You follow up with them and at some point they're like, okay, stop calling me. It's getting weird. You're showing up at my house. It's not okay.
Stop asking about my
exactly.
financial information and the time I had to charge off credit card.
But it's not happening that way now. We're seeing a higher percentage of them come back that said, hey, you're going to come back, and shocker, they actually did come back.
Yeah, no kidding.
And said, hey, I want to buy a house now. So, and then there's a lot of new folks out there that we're seeing, and it's like, my Lord, which is great news. Now, that means that everybody in the real estate industry should go out and buy a new Lexus or maybe a Lamborghini.
Mercedes, they usually
that's
like
second home.
Those G-Wagons. That's the kind of the part of the
G-Wagon,
uniform for the realtors.
Sure. Yeah, that's it. It used to be Lexuses. Now they stepped up to a G-Wagon. Right.
I still know a few that drive Lexuses.
Here and there, but it's funny. The applications are up, something like 13%, week over week, 16% year over year.
Okay.
For this week of January.
So this is not just
like
the typical dead time is the holidays, basically Thanksgiving till the first of the year. So this is not just the spillover from all those people that put everything on hold in December. You're seeing higher numbers compared to January 2025 is what you're saying.
Right. And so that's a good comparison. Now, typically we say, all right, give me 12 weeks of that and I'll believe it.
Right. Yeah. We need some sustainability.
Yeah.
What do you think's causing this?
I think there's a few things going on. Number one, rates. When Trump came out and said, and as we said, he floats ideas out there, right?
Yeah.
And so we'll see if they all come to fruition. Anyway, he said, hey, we're gonna have the general GSEs, Fannie and Freddie, buy $200 billion in mortgage-backed securities. And that comment is what brought us down about 0.25%. And so now we're in the low sixes. Sometimes it's 5.99, sometimes it's 5.75. Just depends on the day and the market and what you want to do. And I think that's a big part of it. Is people are starting to see those rates. I also think it's we had 8% rates there for a while.
Yeah.
And it almost became normal. But everybody was, oh my gosh, rates are so high. 6 doesn't sound so bad when you had 8.
No, it doesn't, especially if you can get in the high fives too.
Yeah.
And what's interesting is that Trump's, and he has floated a few ideas out, and we've talked about them on other episodes, which are, the transportable mortgage. You basically pick up your mortgage and take it with you to the next house. And, we talked about the benefits, but also that there are some pretty clear downsides to that, rates being higher, negative equity, things like that. The other thing was the 50-year mortgage, great for getting monthly payments down. I mean, that does solve the monthly affordability problem. But when you look at the life of a loan payment, I think we calculated that $300,000, you're going to pay about $916,000 in total.
It was a bunch
over 50 years. And so the best idea, in my opinion, that Trump has come out with is this $200 billion to buy these mortgage-backed securities. And I think the market agrees, because when they came out with the 50-year, when they came out with the portable, when they came out with, Jerome Powell needs to be put in prison, all these other things that they come out with, nothing really seemed to have the effect on mortgage rates like this latest announcement. And I think, it's a new year. Yes, we're 6 years removed now from those COVID crazy rates are almost around about 5-6 years removed. So people are starting to get less optimistic that we're going back to a 2% rate, and they're starting to move on with their lives. So there's a lot of factors, but you can't fool yourself in thinking that interest rates aren't a big factor. And when you start to see those numbers get into the fives, people start to apply. Like for you, for example, you told me even before we started filming the other day, you said, is your phone ringing like crazy? Because, I've gotten 17 loan applications where this time last year I had 5. So
Yeah.
I wish I had 17 buyer applications last week. I didn't, but I certainly have a lot of listings right now, and I'm seeing multiple showings per day on some of the listings, which I have not seen in quite some time. And we're seeing multiple offers on listings, which I think you said 6 out of your 10 files you got going right now had multiple offers, which
Something
is
like that.
very unusual, right?
Yeah.
For this time, at least.
But I mean, hey, thanks for summarizing everything I just said. But
yeah, no, you're welcome.
now, what am I supposed to? I'm kidding. I'm kidding. Although I did hear, I heard an analogy the other day. It was a story from one of my Porsche Club members. So
okay.
I'm in the Porsche Club.
Fancy.
Okay. But I'm in the Porsche Club, and I always wanted one since I was a kid. So I got one, 5-6 years back. And I'm talking to this guy.
Hold on, you got it right when those rates were around 2%. You must have had a good year.
It was a good year. It was one of those things where it's like, hey, I think I've always wanted one of these. It wasn't, not brand new or anything, but this guy, he's like, hey, I got a new 911. I was like, really? I thought your wife didn't want you to ever buy a Porsche again. She was going to divorce you if you do that. And I'm aware it's supposed to be Porsche.
Yeah.
If you have a fancy one. But anyway, and
I have a Kia. I think it's supposed to be Kia.
Yeah. There you go. And so I said, well, how did you convince her to let you buy another one? He said, I went in there into the living room and I said, you know what, honey, I think I'm going to buy a Ferrari. And she said, oh no, there is absolutely no way you're going to buy that's ridiculous. I said, okay, I guess I'll buy a Porsche then. She was okay with that. And it's kind of the same thing Trump is doing. It's like, hey, we're going to go do 50-year mortgages. Oh, yeah, that didn't go well. So maybe we'll do portable mortgages instead. No, maybe we'll buy $200 billion in mortgage-backed securities.
Hey, that's a good compromise.
And I think that's what's going on. There's other things going on in the market too. I mean, there's a lot of houses out there that have been on the market a while. People are starting to pick those up. But we're now starting, I would say 6 out of the 10, just like I said, has had multiple offers.
Yeah.
And the thing about applications increasing is those, 30 to 90 days from now, those turn into sales. Mm-hmm. And so if you watch, like one statistic in our industry is credit pulls. Okay. Like how many times are we pulling credit in a week, a day, a month, whatever it is. And so as we see that increase, then 30 to 90 days later, we see contracts, under contracts, in process loans, and so on and so forth. And they close, 30 days after that. And so, that's all increasing. So as we see that as a trend, that's great for the people that are working in the industry, but not necessarily for the buyers that have been trying to buy a house.
Right.
Imagine if you saying, I'm going to wait till rates come down. Have you heard anybody say that?
I've heard everybody say that.
Yeah, just about everybody say that. and I think there's some factors here. They've been waiting for that to happen. They have come down, but I think also they're seeing some headwinds. Yeah. Nobody's really saying, hey, I think, we're going to see a rate cut at the end of January or in March or in maybe this summer. Mm-hmm. It's not like there's a assured thing. I mean, the last time I looked, at the CME data, it was like 94% chance that we're not going anywhere at the end of January at the next Fed meeting. Mm-hmm. So I think as people see that, they're like, well, okay, I don't really see news, rates are coming down. This is probably what it is. I should probably buy something. Yeah,
well, again, too, if you're seeing multiples, at low 6s, high 5s, like watch out if it goes much lower than that. And so that's kind of, you have to balance like the cost, is sort of do your own risk/cost analysis in your head. Like if we do get into the high 5s, how much, or the low 4s, mm-hmm. Low 5s, sorry, how much lower does that bring my payment? 1. And then 2, what sort of competition am I going to be going up against? Because, for a little while there, when we were listing a lot of homes and rates were in the, high 6s, even into 7s, for a brief time, the 8s, like you were just lucky to have have somebody come and go on a showing of your listing. And, let's not even talk about if you get an offer. You get an offer on your listing. It's like, they want you to give them the moon and the stars. And it's like, yeah, no problem. What else can I do for you?
Yeah.
And now it's like, okay, the sellers have a little bit more control over, okay, this offer came in and they want, you to pay for this and that and the other thing. And it's like, okay, so, no, how about we've got 3 other tours scheduled for this week. And so, that you have to think about that as a buyer. Do you want to wait to that optimal time that rates come to where you quote unquote need them to be? But also you must factor in, what is the competition going to look like? And what are you going to be able to give the seller, what is the seller going to be willing to give you at that point, when rates are down and showings are up?
I'm not a big told you so guy. Well, except with our children. I mean, there's an art to being able to just subtly bring that up, like, hey, I think I said something about that a while back,
Yeah.
but, we've been telling people sort of since the beginning, like, hey, as things pick up, competition picks up. You're not going to get, $12,000 in seller contributions.
Right.
You're not going to get a new roof put on and a new HVAC system, just because the next guy is like, I don't care. I don't need a new roof.
Yeah.
I don't need the foundation work. I don't need this. I don't need that. And then, I really don't think we're headed towards COVID times.
Yeah.
Like that was nuts. Right. And I don't see that happening. I do see it picking up quite a bit in 26.
Yeah.
We've had 3 hard years in the real estate industry. And I see it kind of turning a corner, and we're all encouraged by this happening. Now, the Fed news cutting rates, right? So there's none of that. They're not talking about it.
Right.
Except if you look at the probabilities chart and the, CME chart, and you don't see anything of significance. I mean, everything's like a 20% chance, a 25% chance, maybe of a drop until you get to June.
I wonder why.
Why do you think that is?
Because Powell's term will be up by then.
That's right.
So we'll have a new Fed chair.
A new Fed chair. Yeah. So I mean, I think that, we may see a drop in June. We don't know. I mean, obviously it's unpredictable where this market's going to go.
Yeah.
But, the good news is that, hey, we're down to low 6s on a conventional loan. Now, if you're doing FHA, you're going to get, low or high to mid 5s, which is kind of what we expect. And anyway, but you're going to want to make sure you're ready for that.
Yeah.
And so how do people get ready to buy a house?
Well, I mean, that's a good question. There's a lot of different things. I mean, you kind of have to look at your financial situation first. And that's why generally, I mean, I send them to you or, people like yourself.
Yeah.
But mostly you.
Well, thank you. I appreciate that.
So, I mean, I tell them like, look, you really need to understand what your buying power is so you can be in a power position when the time is right. You don't have to buy right now. Getting a pre-approval, you have to kind of dispel the myths that getting a pre-approval is going to hurt their credit score and stuff like that. You've mentioned this to me many times, but there's ways to do soft pulls to get a pre-approval. And, that way we understand like, okay, what sort of houses are we looking at? What sort of neighborhoods are we looking at? Are we looking newer builds where there's a municipal utility district or mud tax here in Texas? Because, I mean, it's also, we're talking as people who do business in Texas, but one of the challenges that we come across here, two of the main challenges are property taxes, because you're going to have higher property taxes here in Texas, and then insurance. That varies drastically from neighborhood to neighborhood. Where we're sitting recording this podcast, property taxes in this neighborhood are, roughly 1.7%. If you go down the road to, one of the newer builds, they're 3.6%, 3.5%. So, starting to hammer out those things, honing in on what neighborhoods, what's important to you, what are the trade-offs of a newer community versus an older community, speaking with a lender, making sure that your financial house is in order and you know what you're pre-approved for, so you know how to attack the situation when you're ready. And then, the obvious thing is saving up a down payment so, you're not, crushed by the amount of money that you have to pay to purchase a house, and having a good plan for that.
So we'll talk a little more about this in another episode, but I think, it's important to have a conversation with a lender. Typically, like during COVID, I mean, we didn't have much conversation. We didn't have time to have much conversation.
Yeah.
I always told people, hey, if you got a question, I got answers. Call, text, email, send a messenger pony, whatever you use to communicate, ask away. Nothing's off limits. And so, I've always kind of said that, but realistically during COVID, that was hard.
Yeah.
And so a lot of people, they jumped for it. Like, oh, what's my payment? Okay, great. Sounds good. Let's go. And they let me put down, $10,000 in earnest money on a $300,000 house, and my option fee is going to be $5,000, or whatever. And I mean, they were offer number 23 in the stack.
Like, that's not like hyperbole. That has happened. I've seen people do stuff like that.
Absolutely. And that's what you're up against. And so it really kind of sucks for the first time home buyer, because a lot of them, discover they need closing cost help and maybe a down payment assistance program. They're getting into their first home. But that's super important, right?
Yeah.
Like that's where they're going to raise their kids. That's where they're going to grow older together, all of those things. And that's important, so it kind of stinks when that happens. But even if you're a first-time home buyer, that's all the more reason to talk to somebody like us. Is like, let's go look at the credit. Let's go look at the income. What do you have in assets for down payment, closing costs, and all that good.
Yeah.
A relative who might, is Uncle Rich going to write you a check, for a gift,
right?
That kind of stuff. We're going to sort all of that out, and I'll talk more about this in another episode. But don't fall for the soft pull.
All right, that's a little cliffhanger for another episode.
Very good reasons why we'll talk about in our next episode. The landscape is definitely shifting.
Okay.
So,
well, there you go, guys. You got something to wait for next week. So I think that's a perfect place to leave it, Mark.
Mm-hmm.